Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudelli sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudelli.
Hey everybody, thanks for tuning in for this episode with Linda Raschke. Remember, new shows are posted every Monday and Thursday. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with veteran futures trader Linda Raschke. We discussed trader development and how her trading style fit her personality. She shares with us her daily trading routine, her technical strategy, and how she goes about trade execution and manages risk. Last but not least, we discuss journaling and behavioral habits. So without further ado, let me take you right to the interview with Linda. Great having you on the show today, Linda. I've been looking forward to this, and even though I've been looking forward to this, I wasn't sure where I was going to go with this interview because I've heard you on other podcasts. I've read other interviews that you've done, and I think the trading community knows a lot about you. But something that I have gone through in my career, I'm not sure I've heard you talk about this, is whether or not you've had to shift gears with your style or your strategy because maybe you've changed a little bit as a person. I know in my career, I've been doing this for 20 years. I had to shift gears about 5-6 years ago. I was just tired of scalping all day, every day, basically being a market maker because it just didn't excite me anymore. And I wanted to still trade every day, but I didn't want to be as active. So I had to adapt to who I felt I was now as a person. Has that happened to you? Throughout your career, have you had to change your style or your strategy because you've changed as a person? Or have you been going at this the same way as you started?
I feel like myself as a person, I haven't changed my basic nature. You had a person on your show, Mandy. I think she was the one that had mentioned your name to me, and she's in Australia, and I believe she's a coach or something along those lines. And, they do all those personality tests, and you're an introvert or you're an extrovert or you're neurotic or you're, all that kind of stuff. So there's a part of you that never changes. And I think that stays true throughout our life. And that's why some people are better suited towards professions where they're more interactive with other individuals, like sales, or they need a different type of creative outlet, or some people are really good at doing research and science and, as opposed to futures trading, thinking about what's going to happen, the anticipation or the next step forward. So that's why some people make good teachers and some people make lousy teachers, or, some people are really good at professional sports and they're not going to choke, and others might. So there's a part of our core that really never changes. And that's why they, not to be cliche, but the old expression, if you don't know who you are, the markets are an expensive place to find out. I think one thing too that never really changes is people process information differently. Some people process information visually and are good working with a chart. Other people process information quantitatively and work with data. So what might work for one person might not work for another person. And so you have to recognize there's no one classic stereotype of what a trader personality might be. Um, I think that for myself, the biggest factor in my development would just simply be experience, gaining in experience day after day, year after year. And I think most traders will admit, if they've been in the business 10 years, how much more they know when they might have thought that they knew a lot, being in the markets 3 or 4 years. And it's really understanding the market's action, bull markets, bear markets, dull markets, noisy markets, the changes in the noise level, the changes in the market's efficiency. So seeing all the different conditions that can exist out there, um, is really what develops us. But I think our core still stays the same, just like if you're a golfer, you're going to have a certain style of golfing, but you have to see all the different courses and windy conditions and rough conditions and so forth, and same thing with tennis, the different types of surface that you can play on. But, the general tennis player is going to have a style that's distinct to them, and they're probably successful because they have their own unique style, and it's probably not going to change a whole lot.
Yeah, I absolutely agree that a trader needs to find a style distinct to them. And I want to talk about something that you said that I really loved. You said that the biggest factor in your development as a trader is your experience. What has your experience taught you, and how has it made you a better trader today?
I think that as you gain an experience, you become more discriminating. I mean, obviously, I'm looking to trade where there's a supply demand imbalance. It might be a swing that's just reversing, or it might be continuation of an existing trend. I want to be on board when there's that supply demand imbalance, and that's the wind at my back. So I want to have the wind at my back, and you know, I think for me, a good part of trading is the leverage that you use, So it's okay to dink around and feel small spots and stuff, but it's just like we were talking about tennis when your opponent is pulled off court and you have that rare opportunity to put it away, you need to be able to tee it up and play with much bigger leverage. And that's where I think the majority of professional traders will make their true money. It just doesn't happen that often. So the experience allows you to add more context, understand tone and pace and volume, and when you've really got those green light go conditions. Does that make sense?
It does, but I guess a question I should ask to make it a little bit more clear is, has your experience helped you with the development of your strategy, or has it helped you with the execution of your existing strategy?
It's not executing my strategy. I would say that I was a little bit more aggressive and keen on really getting optimal trade location than I am now. Now I'm just like an old fart, sloppy and like, okay, make sure you get the trade on, right? I don't want the stress of having to micro manage an entry, but I would say that the experience really comes from knowing when something is ripe. I want to know that it's ripe, that yes, I can go in and I can play a full line, or I need to pull in the horns and not it's just a modest opportunity, and when the volume's not there, I probably want to be a little quicker to take profits, and when the volume is there and the momentum is there, the experience helps you stay with uh, a move. It's recognizing that you caught the big fish. So that's really where the experience pays. I mean, I can make stupid little piddly sloppy trades with the best of them, but I know when I got a good trade on, I'm confident of the fact that the market's acting in accordance with my models. And not only am I really good about staying with it, I'm good at adding and pressing it, and there's very, very, very few times that I will add to a trade.
So it's recognizing the situation, seizing the moment, or staying away from the moment.
Well, you can put it that way. Yes,
Yeah.
knowing when to stay out for
Yeah.
sure. That's a good part of it.
Yeah, absolutely. Now, I want to talk a little bit about your trading process. Can you walk us through, give us a day in the life of Linda Raschke? What are you doing to prepare? Talk to us about while you're waiting a trade. And then if you could share with us about, your time horizon and how you go about your execution.
Well, I think that people probably have no idea of how much time and work, one can put in when the markets close. And pretty much for 3 decades, I had the same routine, every day. Now I've got kind of bad arthritis in my right hand, so I can't write as much with a pen or like I used to. But at the close of every day, actually since 1982, I used to update my charts by hand. I had about 30 stocks that I would update, draw in the bar. And then at night, I'd call this hotline to get the oscillator, which was basically this 310 oscillator that I use now, a modification of it. So you're always doing a lot of things by hand. And they say that when you do that, the information goes to a different part of the brain than if you're just observing on the charts. So then when I started trading more futures aggressively, probably in 1987, 88, 89, because the liquidity in the options really dried up after the crash. It just became a very marginal ground to trade. Even though I was sitting upstairs, and not making markets in the pit anymore, it just was a crummy environment. So I started trading just about all futures. And so I'd write down the closing price, write down the 2-period rate of change. I have my little notes that I make, like little notations, a circle or an X or a check mark if it's a certain pattern. And then I take that information and I also write down the closing ticks, the breadth, the trend, just 5-day moving averages, this stuff, yada yada yada. Put call ratios. I'd write all this down at the end of the day, and it takes some time. Then I would transfer that onto a worksheet that I had that I would prepare for each day with a market, whether it was going to be a buy day or a sell short day or a breakout mode, or if there was assorted other little patterns that I had. And on that sheet, I would also put down my existing positions, and if I were looking to exit one the next day, or not just initiate one the next day. And so that pretty much is it. Then I always watch the markets when Asia opens. And, you can see my lifestyle here. I might as well just have a little cot in my office, right?
I was going to say, this is
Yeah. So, and then on the weekends, I used to do research. I mean, I would, I could sit down and crank out 10 hours, never getting up from my seat, if I became obsessed with something. So it is a very consuming type of business. I don't think anybody quite recognizes the number of hours that you can put in, when you're first starting out, but easily 80-hour weeks, easily. So that I always had my office, off the side of my house, and then I didn't have to commute, and that allowed me to do that, of course. So that's, for me, the most important part is deciding, which markets, having done my analysis the night before I see the markets in the morning. It doesn't work for me if I got up extra early at 5 a.m. and then tried to scramble and do my homework. I'm behind the gun, and the odds are that I'm not going to have a great day. And but when I've prepared and I have in my head the models, and I know how the market should act if my models are right. And then it's a matter of, just being excited when I know the models are right and putting the trade on. And I don't try and time it like off of 2-minute charts or 5-minute charts or that kind of stuff. It's just okay, I got the main idea right, it's working, and then it's a matter of assessing the tone. Is this a day where I can have a longer holding period? Where usually the heavier the volume, the longer you can generally hold a trade. When there's light volume, you're just in noise chop, and you really need to be trading, your smaller size, and you're really in your scalp only mode. And I think it's very easy for people to overtrade in these types of environments. That's what I see. It's very easy to overtrade. In a choppy environment. I actually see people losing more money, getting chopped up in these little random consolidation days than being on the wrong side of a big day.
I'm the classic overtrader, and I've had to work really hard at putting things in my strategy to keep me from overtrading. That's for a different day and conversation. But what I'm gathering so far about your process is, from your preparation specifically, is that your preparation begins on the close the prior day, right?
Right, right.
Okay. So you're updating your charts, and what else?
Well, I stopped updating my charts when I actually got decent software, computer software, but I never stopped updating my numbers, as I call them, writing down
Okay.
the closing price and the 2-period rate of change and my little patterns and stuff like that. And I can go through and do like all my market statistics and all the different markets in about 25 minutes. So it's really grunt. I mean, it's really grunt work. There's like, really a second grader could do it. And then it's calling up each chart one at a time and then writing down what I am going to do the next day.
What time frame and style of chart are you using?
When I do my end of day homework, I'm just looking at a daily chart with candles, because I like to see the candles really show the trend of the day for me. I don't use candlesticks on any other time frames. It's just when I do this analysis, just looking for the very next day, and I'll look at a 2-pair rate of change and a 310 oscillator. And then I have a 5-period simple moving average and a 20-period exponential moving average. And that is pretty much the sum of my indicators.
Are you looking at any fundamental analysis?
Zero.
Zero fundamental analysis. Okay, so let's focus obviously on the technical analysis. What are you looking for? What picture are you looking for to paint when you're looking at this analysis?
Well, I like to look at the previous day's high and low. Those are the most important points to me. And um, I'm watching how the market moves off the opening price. Do we open and then do we test and then reverse? Those are really the choicest trades, where let's say you've had 2 days high to low, and the market opens. Maybe we open up just a little bit and then we flush down, test, and then come back up. I mean, that's a really sweet trade. Or let's say I'm coming in and the market's had 2 days high to low, and I'm looking for a buying opportunity, but the market gaps way up. Okay, so then I might short that market first, because it needs to still come in just a little bit. And then you can look at how a market moves off of the gap. Does it try to trade into the gap? Or if it doesn't make any move to trade, into the gap, then you can have a really strong trend in the other direction, in the direction of the gap. See? So all these things are really easy to model and quantify. but it really means nothing unless you're observing it day after day after day. And that's where, I mean, I'm not a market profile person, but market profile does lend itself a lot to filling out these concepts, the test reject, or is it open trend, or is it just open rotate around the opening price all day on low volume. So I think understanding the market from a conceptual standpoint, free from linear bar charts, is really important. And I'll do my best trading if I'm just looking at like a 30, 60, and 120-minute chart, because it's get the main idea right, once the market opens. And I think that if you're trying to look at 5-minute charts now, I mean, you can find spots, to trade off of 5-minute charts and stuff, but you're certainly not going to get rich, that's for sure.
Are you trading outside of regular trading hours or primarily just during the day?
Oh, I trade in the evening all the time. I mean, that's I'm really bad. I like putting positions on in the evening. Let me put the position on and I'll go to bed. See how it is in the morning.
Walk us through, once you have all of the information that you now have your picture painted of what you're looking for, what gets you into the trade? Because you're not, to me, it sounds like you're not using a systematic approach to where you're waiting for the exact same thing to happen all the time. To me, there's obviously some discretion, some feel that goes into it, and then you are waiting for the market to do something, and then for you to then get in. And then I want to know about how you would determine where you're wrong in that idea, and then how you would determine some targets. Does a market get you out because you have price targets? Does it get you out because something changes in the market? Do you trail a stop? I mean, there's all sorts of different ways to get out. So just if you could walk us through that.
Absolutely. And that's a very valid question, because that's where I think the experience really comes into play. How do you enter a market? Everybody would like to, have a set concrete formula. Okay, enter on the breakout of the first 15-minute range, or, everybody wants a formula to enter a trade, and it doesn't work that way. I mean, the markets unfold differently every single time. So I'm watching to see how the market opens, but let me clarify that, because when I sit down at my desk, I'm like, let's say I'm in Chicago, I'm always using the 7 a.m. reading for every single market out there. Okay. Why? Because 8 o'clock was the time that the New York institutional guys sit down on their desk. That's, to get ready for the old bond opening, the old bond pits, right? So the action really, the playing field starts, the US session to me starts at 8 a.m. Eastern time. Even if you're looking at the S&Ps, I'll always make a trade in the S&Ps before the market opens. Why? Because the DAX has such lovely rhythm, and you can see, like, if there's a bull flag on the DAX, a little short-term continuation pattern or something, the S&Ps are going to be lockstep in sync a good percentage of the time. It's not that perfect with the DAX, over the last 2 years, but you can see the overseas money flows is really what it is. How are the money flows? And, of course, if there's economic data that's due out, that can cause noise, but the majority of time, the market's going to do whatever it was going to do anyway, even though there might be more noise. So you have to work with the markets. You have to, back to our tennis analogy, I would love to say, oh yes, if the opponent returns my serve and hits it here, I'm going to do a backhand down the line. But it doesn't work that way, because you don't know what the spin is going to be on their ball, if it's going to be a little short or a little bit, in the middle. So you're really having to work with it, and stay in the moment. And, a lot of that is assessing, like I said, the volume and the tone. Usually, if there's a heavier volume day, you have a lot of correlation in the financials. You can see between the currencies and the bonds, and even gold. Sometimes you can see a lot of correlation. So It's not so overwhelming watching multiple markets at once because you can kind of lump some of them into one category, if that makes sense. So I think being able to assess these things, and of course, I have levels in the S&Ps I watch. Of the Globex session is really important. Globex high or low is tested like 95% of the time. So of course you're, quickly calculating, oh gee, do we have better odds of testing the Globex low or the Globex high first, and I like swing highs and swing lows and seeing if the market is moving towards one of those, and then if you look at the shape of a 120-minute chart or a 240-minute chart, it's pretty easy to see if there's a clean divergence there or a continuation pattern. We came in this morning and the market was incredibly strong yesterday, and then we just consolidated all yesterday afternoon, and that was the consolidation. We were poised to go off to the races again. So I think that yes, you can read charts, to see if it's more advantageous to enter sooner as opposed to later, or work with the market a little bit. But over time, there's some common sense there too. If the market just had this crazy huge momentum rally and it's just the first day up out of a breakout range, you're probably not going to get too much retracement there. You might have people that are trapped, or now, everybody wants to jump on in. Um, I have to confess, I don't really try to think it out in terms of a verbal uh, a verbal strategy. I just really try to stay in the moment and flexible and, wait for a recognizable pattern.
How do you determine a stop? I mean, are you working a hard stop or something you have to change for you to get out? And also, along with that, is how you determining how much you're going to risk per trade? Is every trade that you're putting on the same contract size? Is it the same risk amount? How does that all work?
I don't use hard stops. And I couldn't use hard stops when I was trading much larger sizes as a CTA and so forth. I mean, you can't sit there and put a stop on 300 coffee futures, so if it looks like the trade's not working, you just try and get smaller, put it that way. I mean, pretty darn well if it's working or it's not working. I mean, anybody's stupid if they know their trade's not working, and they don't do something about it. Okay. That's, you're not going to last very long. Um, so you should have a good idea in your head as to what the market should be doing. Why did you make that trade? What is the play? Is the play to go up and test the previous day's high? Is it getting there in a slow motion or a fast motion? What are you playing for? I think that's the very first question that you have to ask. Now, in terms of setting targets, I really don't set targets, but I'm watching it in relationship to a reference point. As I just mentioned, I'm watching it. Can we go up and test the previous day's high? This morning we opened up. Can we go up and test the Globex high? Of course, we should have tested yesterday's high, or rather, Friday's high, because of the momentum. So you got pretty good odds there. So that gives you your initial bias. So I have my initial bias. The chart confirms it. The tape confirms it. Is there volume there? Well, we're probably going to get a little bit more, than I'm looking for. So when there's a breakout trade, like let's say we've been consolidating for 3 days, and let's say in terms of market profile concepts, and I mentioned that because so many people use that nowadays, you can look at the fact that there's a volume node, and that just simply means that the market has come into balance. It's come into an equilibrium point, and you could see that, like, for example, on the Russell futures 3 days ago, we had 3 days of price bar overlap. The market was in balance. It had a big perfect equilibrium node. So the first day out of something like that, I don't put any targets on, because I don't know if it's going to give a little, and I don't know if it's going to give a lot. And if it does give a lot, I don't want to chop off my nose to spite my face, because that's where the real money is made. Maybe 2 days a month, are making up 80% of my month. It's a very, very uneven distribution of, how these profits or losses fall. It's not a standard bell-shaped curve type of thing. You've got like really fat tails in the market. I think people underestimate just how fat those tails are. And so I want those tails to work in my favor when I've got a good trade on and I don't want to exit too soon. So usually what I'll do if I know I've caught a strong trend day, and I guess that would be something where experience would just help you understand, the market internals are a particular way and the volumes a particular way and the tapes acting a particular way. What I'll do is I'll have a core position on, and then I will try to scalp in the direction of the move as well. So I have a core position on, and if there's a little continuation pattern or a little pause, I'll enter and then, flip that out. So I never trade against my position. I never lift my position and try to reestablish it at a better price, because the risk is just too great that I won't get it on again. That's what happens with the very best days. And I think that that's what I was trying to explain when I was talking about the experience factor is what really is going to make you into a professional is understanding what those really best days look like and where you need to be discriminating on that, and increase your leverage and know how to hold it. If it's too easy to take profits, obviously you want to be staying with that market.
Yeah, I do. Absolutely. I mean, it's so funny hearing you say how you have a core position on and then you scalp around that position in the direction of the core position. That is how, for me in my career, I've had my best days. And it's because I see the direction, the move is underway, everything that I want to happen is happening. I keep something on, I try to ride it. And like I said before, I'm your classic overtrader. It's hard for me to just sit there. So what I taught myself how to do was trade around that core position. If I really liked the direction I was in and I felt like I got them in just at the right spot, I would just scalp around that position, kind of keep myself busy and occupied, and it would actually help me keep that core position on. And just one thing I want to see what you think about when people say, and this is one of my pet peeves, is that if you make X amount a day, it'll turn out to X amount a month and X amount a year. In all the years that you've been doing this, have you ever been able to really plot how much you're going to be able to make a day, a month, and then the year would turn out that way? For me, it's always been grind it out, and then I would seize the moments, and then that would be my month or that would be my year. What do you think about that?
Well, I don't know any professional that talks that way. I've never, I mean,
Exactly.
I've never heard that from anybody I know that's making a living trading. Maybe it's a good,
I love
maybe
it.
it's a good guideline for somebody that's just starting out, because once you have made a certain amount of money, there's the risk that you start to overtrade, and it's pretty well known that most people will make money in the morning and lose in the afternoon. So perhaps that's a good guideline for newer traders, just to say, okay, step back from the table a little bit. It's like understanding variance, a high variance poker game. You need to know when to step away from the table after a big wins, right? So you could kind of draw some type of analogy there that will help a newer trader rein in their activity level. But I started off on the exchange floors and the options pits, and making markets in the equity options was a little bit more strategically oriented. I mean, you could easily walk away for the day, at noontime if there wasn't anything going on, because you could stay hedged. You could stay pretty delta neutral there. um, you probably wouldn't walk away if you had much directional exposure, but you could never flatten out completely. I mean, for years and years and years, I always had positions on, because there's no way that you can get out of all these different series and back months and calendars and just, crap on your sheets. So that was a time that's long gone, but uh, there's I guess that you could interpret any statement made to have a positive side or a negative side, but I do think that the thing that people underestimate is how you cannot predict where these ripe opportunities are going to come from. You can't force it, and that's why for me, my process of just writing down the numbers, preparing my sheet, get up at the same time in the morning, check the markets, make my coffee, sit down in front of the screens, ding, 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 it's another day. You just don't know when and where, these big moves are going to develop or unfold. I mean, obviously you can see if it's a higher volume environment, but I'm just saying in general, you can't force it. You just have to be there to take advantage of it when it does present itself. And so that grind that you were referring to earlier is just part of the process. I mean, I sit here in front of my screens all day long, all evening long. But I enjoy it. I like it, I don't feel like I have to do anything. I always am fooling around, playing with different stuff and so forth, but that's not for everybody, and you know s- I don't know if that all makes sense.
It makes perfect sense to me. When I look back at my career, I could probably say the biggest mistake that I made, and I made them all. I made pretty much every mistake in the book, but the one mistake that really eats at me the most is putting pressure on myself to make X amount a day, because that hurt me in two ways. One, on the days I wasn't doing well, I'd force it and try to make money, even though it wasn't there. And secondly, how it hurt me is the times that I was trading well, I leave early because I was up X amount a day. And then the next week, I'd hear how everybody in the pit made all this money. And I felt that I had done well, but everybody made a lot more money than I did. And then that week, I'd stay and press it when I was up money, and then I'd give it all back and then some. So for me, I didn't learn how to be a taker when the market was giving it to me and stingy when it wasn't. So, like I said, nobody knows that what you just said as well as I do. But I could talk to you all day about that. But I want to move on. I want to talk about journaling. And I'm curious, throughout your career, did you journal? Did you journal your trades?
um what's the purpose of journaling? I know damn well why I up, I mean, I don't need to write it down. I know it, so I'm not sure. I just remember every tick, every price I entered at, what I was thinking at the time. I just don't have the extra time to write all that, and I don't want to be writing during the day. I mean, you know, I, d- I I know that it does serve a useful purpose when you're starting out. I remember Brett Steenberger, he's a good friend. He always used to say, "Well, just simply figure out what you're doing right and do more of that, and if you're losing money in the last hour, don't trade in the last hour, it's so simple, right?" So, I think that the journaling could be a good exercise initially. Maybe my form of journaling at the end of the day is logging my numbers. I'm sure you could say that there's a therapeutic value in doing some grunt work or writing stuff down. I will tell you this, that for many years, anytime I read a book, I would make notes on it and write down my notes. Or if I was doing research, I would detail out tables, in a notebook, diagram out patterns. So I did a lot of that type of activity. And I still have all these notebooks. Seriously, I've got like 50 wire brown notebooks, and I I don't look at any of them, but I will tell you something humorous. So I mentioned to you, I just finished writing this book, which hopefully will be out in print in a week, right? And I was like, God, I must have a lot of stories after 38 years. I should really look and see what I put in those notebooks of mine, right? Every single frickin' one said the same damn thing. So I'm just writing down the same sentence like every time I would jot down a note to myself, what is the play? What is the play? So get the main idea right. Okay, yes, that's right. Get the main idea right. What is the play for the day? And like every year for 30 years, figure out what the play for the day is.
What are your thoughts on behavioral habits?
You're screwed if you develop bad habits. No, no, I'm serious because you know what? No amount of coaching or mentoring or anything is going to ever eliminate those bad habits. It's like drinking alcohol or smoking cigarettes. It's a habit, and you're never going to get rid of that bad habit. The only thing you can do, and that's as I mentioned to you earlier, is replace it. Okay. So if
Yeah.
you have a bad habit, you can't get rid of it. Just put that out of your mind. You have to learn to substitute an alternative behavior. And there's lots of creative ways you can do this. For example, I'll give you like a very practical tool that somebody could use. Let's say they find themselves over trading and taking reactive trades and so forth in the market. How do you replace erroneous behaviors? Perhaps they take a week off and trade a volatility breakout system that has absolute black and white rule set. That could be an educational exercise. Okay. You don't need to do self journaling on something like that. You need to do record keeping. You keep records of where the entries will be when it's hit. What does the system do? It doesn't have to be that system. I just like that system because it's got black and white defined rules. And I think that that's what trips people up, is that, most of the time there's a lot of ambiguous gray area in the markets, and your cognitive biases, okay, which of course everybody has cognitive biases except you, right?
Yeah.
List 20 cognitive biases, but none of them pertain to us. So, it really is pretty humorous. There's such a field of behavioral finance that has grown in its sophistication in the last 10 years. And you can read the stuff and you can be fully aware of it, knowledgeable, but it doesn't mean you're going to change anything, you see. So you have to find some creative way to be accountable. Perhaps you have an online trading buddy and you guys have a pact that you're going to share your statements with each other at the end of the day. I will guarantee that if you have somebody, if you knew that I had to look at your trades at the end of the day, and I don't do that crap with people, but I'm just saying, if you knew that you had to show your trades to me at the end of the day, you probably would not make half of those trades. You see?
Yeah.
And I mean, I am no longer at CTA. I pretty much retired from the hedge fund game, and I still trade for myself because I can't help it. But I will tell you one thing, that was one heck of of a guideline for me in making sure I stuck to my program, because I have clients. Most of my clients were fund of fund, managers. So a fund of fund might have like a stable of 10 traders that they try to have non-correlated programs, a trend follower, short-term discretionary, long short pairs, da 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 da. So I was always in the short-term systematic discretionary camp, and I wouldn't be correlated with anybody else, but they dissected us. They knew the stats for my trades every single day, every single market. And every 6 months they would walk into my office for a due diligence meeting. And I think I had about 150 million under management. They'd sit down and be like, okay, last year this market was your worst performing market, and this one was your best performing market, and by how much and how many days to recovery to equity highs and all these stats, and you're like, holy shit, they know this stuff better than I do. And so, you mind your P's and Q's, and you don't get too stupid. When you're running your program, you try to follow your program because that's what you're getting paid to deliver. And so if you have a trading buddy, or a partner that you honestly share your end of day statements with, I bet you it'll make a huge difference. And I don't mean talking about trades when you're putting them on. I don't believe in that. I don't tell people my trades. You don't see me posting crap on Twitter. You don't see me, I'm a good card player. I have a poker face, and you don't know what my hand is, and I prefer it that way. But I would say that is a good solution right there. Or some people I know have a pact with their spouse, that they will share their P&L and trading stuff with their spouse, each evening. Whatever works for you. But my point is, if you have a problem, there are many creative ways to go about finding solutions.
I'm just loving this conversation here. It just proves to everybody once again, and I've talked about this so many times, that there are no two traders alike. You have to identify what works for you. And one thing I wanna talk to you about a little bit more is when you said that if you make a bad habit or if you create a bad habit, you're screwed. And for me, the worst habit that I had, and I still fight this to this day, is after my best days, I had my worst days. And because I wrote about that, because I'd be so pissed off, and I was in the pit, and I would write it on a trading card and be like, what are you doing? I mean, how many times are you going to do this? I would tell myself, go spend money the next day after a big day. That by doing that enough, I finally learned to go and spend money after my best days, because for some reason I'd come in the next day and I would just, maybe it wouldn't even be the next day, it'd be within a couple of days or a few days after my best days, I would have a problem giving back a huge chunk of what I just made. And I'm just curious, what are some of the bad habits that that you've made, and over the years, with your experience, that you've helped create good habits in place of some of those bad habits?
Well, a pretty easy one is when I was making markets on the floor in the equity options. Pretty much my job was to accommodate the order flow. So if somebody wants to buy, my job is to sell to them. And unlike the futures pits where you have two-way paper every other minute there, in the equity options, the paper would pretty much be one way. So if a customer wants to come in and they want to buy options and the market's rallying and the crowd is very enthusiastic, if I sell those options, I'm not going to get them back. Okay. I'm selling them because there's an edge in them, and I have to run over and hedge myself with stock, you see. So it's a very one-way order flow, and therefore you are put in the position of being counter trend, even on the strongest trend days. That's just the nature of being an exchange member, and filling the paper. And so probably this was common in the 80s, and it's particularly the early 80s when the bull market had just started and people really hadn't quite seen the power of the bull market. It was very easy to get stuck on that one trend day a month, and usually, half the days you can, you average, you get into sloppy habits, averaging, and then you get the counter trend reaction at noontime when the specialists get their paper back, and so you get your paper back, and then the trend resumes in the afternoon. And there was a really nice time of day function, but, you're always in a counter trend mode. So probably the first, 6 or 7 years of my trading, I am losing money on these trend days, and fortunately there was enough edge in trading otherwise that, so one day would cost you 3 days profits, 4 days profits. So that was a bad habit in constantly, finding myself being counter trend. And the other bad habit would be averaging. Okay. So obviously I really wanted to manage money, and I really wanted to trade size, like big size. And you cannot trade big size counter trend because there's just not enough liquidity to really get it back when you need to, or if you get stuck, you're getting jammed, you just don't want to put yourself in that position. You want to be on the right side of the supply demand imbalance, not on the wrong side of it. So that took a lot of strategizing how to, and it really took studying the conditions that preceded these trend days, because all it took was me to have like a few big wins from being on the right side of a trend day. And from that moment, every waking moment is I have to figure out all the patterns that precede the trend days, what they look like, what they feel like, what they taste like, what they smell like, because I want that feeling of being on the right side of that big trend day, and and then the second tool that really helped was I think it was like 1990 or 91. Bob Buran. I had a friend who was exploring different trading systems and so forth, and he had bought Bob Buran's volatility breakout system. And I was a peon floor trader. I didn't know anything about systems and all that crap. So he gave it to me to look at, and it was kind of along the same lines as the Larry Williams style, doing range expansion off the opening price, or Toby Crabell's, range expansion off the opening price type of stuff, except Bob's system was range expansion off the closing price. I thought, let me try this for a bit just as a good exercise, because, I think I followed like 16 markets, and you'd usually end up with like 6 positions on at a time. And you could have resting buy or sell stops out there to initiate. Okay. So I did that for a bit and found it very grounding and interesting because it gave me permission that it was okay to jump on board that freight train when it was really picking up steam leaving the station without being so anal about the perfect trade location, and that was like okay to get the trade on, when it was one of those, they're opening the window for you and giving that green light go. So I was like, okay, there's several ways to skin the cat here, and of course, volatility breakout systems can be incredibly choppy and aggravating, and it wasn't practical to do on any decent size because you can't simply just like have buy stops and sell stops in the softs or natural gas on, a couple hundred contracts. You get way too much slippage, but it was a really great exercise. And so it took a lot of work, but I was conscious of what I wanted to change, and I knew what it felt like to be on the other side finally. And I just didn't want to get my head hammered, from being on the wrong side of the trend day.
Last question before we get into rapid fire. Do you feel that you've learned more about yourself and trading your strategy from your losses or from your winning days?
I think you learn the most from making back losses. The first big loss that you make back, you realize that it can be done. And that's such a big part of the game. To me, the big wins are just sheer luck. It's like sitting down at the poker table and you play 10 hands and one's going to be a big winner. I mean, I'm always that way about the winning trades. It's a numbers game. It's just a function of, okay, if I make 100 trades, I know, 65 are going to be winners, 20 of those are going to be huge wins, some are going to get chopped up, some I might exit, too soon and miss the trade. So I really look at everything as a numbers game, when it comes to the winners. the losers, I take uh, a little bit more to look at, was there an extraneous or outlier event, that caused a particularly big loss? And other than my first 10 years where you're still really in the learning curve, I mean, 10 years as a trader, you are still in that learning curve, no doubt about it. But a lot of times, some of my more unfortunate things happened from this crap that happens, in the market. Like I mentioned, swine flu, or, you might have a position in the grains and lo and behold, the Mississippi River floods, or, you put a position on in the S&Ps and there's a tape bomb or a nuclear explosion. I mean, I was trading when there was Chernobyl. I was trading when there was Japan nuclear crap, So there's always this stuff that happens out there that leaves these big fat tails that you can't foresee and you can't predict. And your only way of mitigating that risk is to not be in the market. So what I'm saying is that by having a position on and having exposure in the market, you are always subject to event risk, or overnight risk, that type of stuff. And you just have to accept that that is part of the game. And so once you accept that this crap happens and you're going to get a lot of bad luck at times, but you can still make that back up. You can still make back up those big losses. That is so empowering. And to me, that's really where my learning came from. I wouldn't say it was learning, but just my continued belief in myself and increased confidence, and really having confidence in yourself is so key to this. And if you can just make back that first big loss, your confidence will triple in yourself.
Love it. We've got some rapid fire questions next if you're ready for those.
I don't know. Is my blood sugar too low?
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. First question for you, Linda. What trader has influenced your life the most and why?
None, because anytime I look at another trader or their style, it totally messes me up. So I do best is to wear blinders.
What was one of the hardest things for you to overcome in trading?
Putting on too many positions, especially when we were on when I was in the equity options, and there's just action everywhere, and different stocks everywhere, and you can't trade them all. And I still have that problem with futures. It's like I see my stuff working in multiple markets. It's impossible to automate on a mechanical basis, but I still want to, clone myself and be involved.
How has your trading process evolved over the years?
Do you remember that book, Flowers for Algernon, that we all read as third graders, where there was this low IQ guy, 90 IQ, who was a janitor sweeping the floors in a research facility or school, and they find this miracle drug, and he gets really smart, and becomes practically genius, and is on top of the world. And then slowly the drug starts to wear off and he regresses back to his lowly self again. So my process evolved to the point that it did because I was doing so much preparation and logging numbers and immersion in the markets, which I just loved. But I have to say, I don't log my numbers anymore because my hand hurts too much. And I I actually like my free time now, you know? So, you know, I actually am married and, to Damon, who I know that you know because he was my original S&P broker in the pits back in 1989. I think he started executing my orders. See, so it took us like 20 years of courtship there, but but now I actually want to cook dinner for my husband, whereas before I could just eat a can of tuna fish at my desk and I'd be perfectly happy. So, you know, um, process is such an integral part of the equation. I still fill out my trade sheet every night. I fax it to two good buddies, because it keeps me accountable. If I don't have anybody to fax it to, then it's too easy for me to say, "Oh, let's watch a Netflix movie tonight," and I don't do my homework or preparation. So I have to have a process where I have some accountability factor in some way that is just not to myself. So I'm not the perfect disciplined person.
So you married your broker. It's all I
Pretty
can.
funny, huh?
Yeah.
Yeah.
Next question. What is one attribute that you believe every trader should have?
Oh, confidence. You have to have confidence and belief in yourself for sure. And that's why you see a lot of people that have made it in this business have either done well in poker or done well in professional sports. I mean, Toby Crabell was a professional tennis player. You have lots of people that have, Victor Niederhofer, champion squash player. The list goes on and on, of people that have had success in some other area in their life that increase their confidence in themselves. And then the second thing would be confidence in your own work. And so the two will feed off each other. If you can come up with your own work and your own system and your own stuff, it's going to give you that much more confidence in yourself. And all these distractions out there, like the social media and the Twitter and the blogs and the da 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 da. I mean, maybe they work for 1% of the people out there, but I really feel like it's an evil out there. So learn to do your own. It's okay if you learn from other people, but then you have to take that work and make it your own and do your own research and, come up with your own little twisted nuances on stuff. And it's really important for a trader to be independent, I guess is the word that I'm looking for.
What's your favorite book about trading?
The Taylor trading technique probably influenced me more than anything because it's not about charts. It's about having your preparation done before you come in the morning, taking one day at a time, and how are you going to trade that day?
What's your favorite movie about trading?
Trading Places, of course.
What's the best piece of advice that you've received about trading?
I remember going to an MTA conference and seeing Hank Pruden, who unfortunately passed. He was a Wyckoff aficionado, say, "You are your own best client. Do your analysis in a closed room with no windows or doors." So in other words, you got to protect yourself from all outside opinions or influences.
If you could go back in time and give the younger you a piece of advice, what would it be?
Oh my God, it's okay to take a vacation. I mean, I had to have positions on every day. It's not good for your health.
If you had an elevator pitch me your edge in trading, what would it be?
My edge. Experience, I think, gives you a big edge in these markets.
Last question for today. What's your favorite thing to do when you're not trading?
Ride horses, lift weights at the gym, garden, anything physical that, gets my mind off the markets.
Where can people find you on social media, preferably Twitter, and if you have a website?
After I just lectured people for looking at Twitter, are you kidding me? I'd be the ultimate hypocrite, wouldn't I? I do have a Twitter feed. I think I've made about 4 tweets in the last year. But seriously, if you do join me, I'll let you know. I should actually post little quotes from the book, all these lessons I've learned, like don't place valuations on the things you are trading. So, yeah, you can join. I mean, it's Linda.Raschke or Linda Raschke at Twitter. See, I don't even know my own Twitter handle. And my website is lindaraschke.net.
What can I say, Linda? It was worth the wait to speak with you. This was awesome. So much fun.
I'll look forward to meeting you in person, Anthony. Thank you for having me on.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.